Today I'm going to be sharing the top 5 stocks on my stock watch list as at September 2019. Not only will I be providing the stocks themselves as well as the highlights as to why they made the list, but I also want to provide a reminder as to where I go to find stocks that I want to put on my watch list, and also the criteria I use in order to determine when and if I should be pulling the trigger. For those of you who are new to my channel, my name is Jared Ayres, and I've created this channel to provide anyone who's interested the ideas, thought processes, tips and tricks that I use when investing my own money. So again, what you see before you is a copy of my screen. So before we jump into the actual list itself, I did want to run through just a few little reminders about where I go to find the stocks that do appear on my watch list. So for the first place that I go is basically the stock screening tools that I have shown before. Well, they're basically available on any online brokerage account that you may want to sign up for, as well as there's a number of free and pay for use tools on the internet as well. The second place I go to look up or find ideas to potentially add to my list are upcoming or recent stock spin-offs. So again, these are companies that are kind of, divesting a portion of their core business or maybe non-core business, and that's the reason for the spin-off. Spin-offs generally are, in the past, have been throwaways, so a lot of institutional investors have certain minimum market caps, etc., that they need to have for any holding in their portfolios. So what ends up happening is when a stock gets spun off, oftentimes there's unwarranted selling pressure on that stock, and that then creates a bit of a depression in the price, even though the business itself may actually be stronger than the original company. So I always like to take a look at that area for sure. And then the third place I look is general business news, blogs, articles, and interviews. So of course, over time I've gotten used to listening very closely to certain individuals, but in general, sometimes you'll get a market that responds to news that may be way overblown relative to the impact that news has on a company or a stock. So that's another good place you can sometimes find some little diamonds in the rough. Just as a preview though, for this top 5 list, 4 of the top 5 came from the stock screening tool, and 1 of the 5 came from an upcoming spin-off actually. So it was actually just those 2 areas where basically all 5 of the top 5 that I'm going through today actually came from. So let's get into it. So the first company on the list is Advanced Emission Solutions Inc. So this is a company you may or may not have heard of. Without going into too much detail about any of these companies, I'm just going to give a brief overview of what industry they're in, and you're free to look up exactly the technology or the exact sort of type of things that they're involved in. This particular company is, as you can probably determine, is in the clean tech space. This is very much on trend where getting a lot of media attention currently, certainly around clean, global warming basically as a whole, and of course clean tech comes into that. So how can companies, how can countries, how can industries reduce emissions, CO2 gases, all that kind of stuff. So Advanced Emission Solutions is one of the companies in that space. Some other highlights: 37% return on equity, 25% return on assets, 13% earnings yield, that's earnings per share versus the price per share. They have an extremely strong growth profile, a very strong balance sheet, and high cash flow generating ability. So these are the criteria that got my attention for sure. I actually do, as part of full disclosure, own this company. I bought it when it was at about, I think, $11.50. I think it's just trading over 14 right now. And for the yield chasers out there, it does have a 7% yield, I believe, currently at $14, and that's with a 53% payout ratio. So it's actually quite a high yielding stock, but that's really driven by the probably lack of attention it has had in the past and its high cash flow generating ability as well. So that's number one on the list. The next one I found was called Coda Octopus Group. So this is a very niche tech company serving private and public sectors. So basically underwater technology, for lack of a better term, some defense related stuff, some I guess private sector applications for companies that potentially say are doing deep sea oil drilling. So they have sort of an engineering component and a technology component to their business. So again, free to look it up at your leisure. 33% return on equity, 28% return on assets, 9% earnings yield. Again, a very strong balance sheet. When I say very strong balance sheet, I mean debt relative to total capital is either low or non-existent. So relative to the cash flow generating ability of the company. This one does also have a very high cash flow generating ability and also has a lot of investment in R&D, and that's always a good sign because in my mind that means that the company is developing its own technology internally, its own intellectual property, and that also helps keep competitors at bay. So they're not basically selling something that someone else is producing, they're generating their own technology and selling that. So that can be higher barriers to entry for sure. So something nice to see as well. The next company on the list, number 3, Questor Technology Inc. This is a Canadian company that trades on the Venture Exchange, so fairly small relative to some of the other companies on this list. It's also in the clean tech space, so a little bit different than advanced emissions technologies from the beginning, but still in the same space. Very much on trend. 28% return on equity, 24% return on assets, 7% earnings yield, very strong balance sheet as well, and again, high cash flow. So this is a bit smaller company, so may caution just from the total market cap perspective, but very strong fundamentals and definitely on my watch list as we kind of go forward here. Number 4 on the list, Twitter Inc., of course, the social network, currently with 330 million active monthly users. That's of course at September 2019, and of course continuing to grow. Market cap of only 31 billion, and I say that only because the likes of Facebook and that have grown to come within swinging distance of that $1 trillion mark. Of course, Facebook has come down recently, but still over $500 billion in total market cap. So way up there. 34% ROE, 22% ROA, 13% earnings yield. So Twitter is growing. The other thing I like about this company is that it's not capital intensive. So the platforms are being built, and it's more of how can they monetize that, and they've shown that they've been able to do that very well with their growth rate and their profitability in recent quarters. So again, very strong balance sheet, likely due to the lack of capital intensiveness required for this business, and of course high cash flow generating ability as well. So something to look for as well as we kind of go forward here. And then finally, Old Navy. So this was the spin-off or future spin-off that I mentioned earlier. It has not yet been decided, the date of the spin-off, except to say that it will be happening in 2020. So there's no ticker yet. There's no TBD is not the ticker. TBD just means to be decided. Discount retailer, currently part of the Gap Inc. $8 billion in annual revenue. Fastest and of course only growing part of the Gap Inc. Will provide protection in a recessionary environment. So what I mean by that is, generally speaking, when you do hit a recession, the tendency is for consumers to kind of bump down. So if somebody, if someone's looking for or used to going shopping at very high-end retailers, then they may come down to mid-tier retailers. If they're used to shopping at mid-tier retailers, they might come down to discount retailers, etc., etc. So the idea would be, with something like Old Navy being in the discount space, is there's a little bit of protection there. So they may lose some customers to, say, the very, very lowest end of the retail spectrum, but they'll be receiving customers from the higher end. So that's something that is always a consideration when looking at the risk score. Where are we in the business cycle? And my general pessimistic view that we are probably closer rather than further from a recession. So again, because it's a spin-off, it could result in some selling pressure once spun off, namely because of its size, and of course it will be free from the parent to act on its own. So right now, as a part of the Gap Inc., it is part of the Gap's total strategy, but as its own company, it can act in its own interests and potentially take on a more entrepreneurial approach to the space that it currently is a part of. So Old Navy really serves as an example that can be carried across all of these stocks on this list. So with my overall economic risk score being somewhat pessimistic to the current environment, namely that we're probably in the late stages of the business cycle, closer to rather than further from a recession, all of these stocks in this list contain a little bit of resiliency to a recessionary environment. Old Navy being, of course, again on the discount retailing side, the two clean tech companies being in spaces that are becoming more prominent, and there's more and more demand for them. So I don't think there's going to be a huge impact to those companies if there is a recession. Twitter doesn't really have a major cost to users, so I think the growth there is going to continue to increase, and I don't think revenues are going to fall off. The bigger and bigger it gets, and the more eyeballs are on the marketing that goes through that platform. So that's really, I guess, some of the messaging that I want to come across with this list, is that you got to think, I think, about the bigger picture as well, not just the actual stocks themselves. One other thing I will point out as well, I mean, with the exception of maybe Twitter, a lot of these stocks aren't very widely followed. So that's another way sometimes to find a bit of a diamond in the rough, is if the stock really doesn't have a whole lot of attention on it. So another thing to consider as well. So in terms of the criteria I use when deciding on when or if I should be purchasing any of the stocks on my watch list, really, I start again with my business cycle or economic risk score assessment. What percentage of equities is that test telling me I should have in my portfolio? So that's the number one thing I go to first. Then, the question of, am I under or overbought for the asset class? So based on where I should be, do I have too much in equities or not enough? So that's, again, something I will consider. Then, of course, which stocks have the greatest risk reward. So I'm looking at not only the stocks that I currently hold, but also the ones on my list. So then that sparks the question, should I be selling to make room, or maybe should I be buying more of what I have? So, are the stocks on my watch list the stronger ones in terms of risk reward, and therefore should I be letting go of some of the stocks I have to make room for those? Or are the stocks I currently own actually very, very strong and even stronger than the ones on my watch list, and therefore should I just be backing up the truck effectively and adding more to those positions? So again, those are kind of the criteria I use. The watch list is exactly that, a watch list. They're just stocks that meet my initial criteria and that I would dig into further to understand sort of the nuts and bolts of what the company does, and maybe even talk to representatives at the company to decide whether or not it actually sounds like the story that I am reading or believing from the different sources of information I'm using to research the stock. So I do genuinely hope that was helpful for you. So I hope you got some utility out of that video, maybe one or two ideas to research yourselves. Again, this is my stock watch list. These are not recommendations by any means. At all times, especially if you're not a professional investor, do consult an advisor that can give you a third-party opinion about what you should be doing with your investing funds. This is really just, again, my own take on how I invest for myself, and you can take any part of it, all of it, or none of it, and it's completely up to you. I will make all the information I did provide in this video available in the description below, so don't worry if you missed any of it. Just scroll down and you should have everything you need. If you did like the video, please do hit the like button. If you're new to my channel and you haven't yet subscribed, then please by all means hit the subscribe button. And any questions or comments you have, or anything you want to offer as well from your own perspective, your own techniques, I'd be, of course, very open to hearing those as well. So until next time, thank you very much for watching.